Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream for September 24th. We're back with one of our favorites, AIML Innovations. AIML is the symbol in the CSE, AIMLF in the US over the counter. We got the chairman, Tim Daniels. Tim, welcome back.
Thanks, Jack. Always good to be back.
So Tim, for anybody, again, I just like to do a quick intro because we always got new people. So again, our whole goal is to bring you those stocks which have that 10x upside potential. Companies going after massive multi-billion-dollar market opportunities that have multiple catalysts in place to create shareholder value, increase in stock price, and that are also at an inflection point in their growth, where some massive things can start happening. And right now, Tim, it's perfect timing because AIML just you completed your acquisition of this equity interest in Tech2 Health, which is, I think, another inflection point, another key milestone right now in the growth of AIML. And this company's involved. It's in the health tech space. Big part of it is mental health. I mean, they're primarily in Europe, right? They're mainly their operations in Europe. You're going to be taking it into the North American market also. Right. You're going to be expanding. Yeah. But okay, so there's some really interesting things which I really want you to explain to our audience. What the significance of this. Some of the I know this sounds really boring, but one of the big issues is reimbursements, payments for all these things. Like in the US, Medicare, Medicaid, the coding drives the payments. In Europe, you have other. So right now there's a major catalyst right now, which is going to create a big difference, which is, I guess, the government mandate for reimbursements, payments for mental health. So we're going to go into all those details because that's going to, I think, have a big impact on your revenues. But real quick, what Tech2 Health, now that you've closed it, what do they have exactly? And then we'll talk about the upcoming stuff.
Sure. Okay. Thanks, Jack. Great introduction. So Tech2 Health, it's a digital healthcare innovator that has a portfolio of mental wellness and health tech products and services that are all designed to improve an individual's mental well-being through a unique blend of proprietary digital assets, remote live counseling, and physical wellness centers. And Tech2 Health has developed, and I won't get too deep in the weeds, but they developed a clinically supported and evidence-based methodology that consists of psychotherapies and non-medicinal interventions that apply body and mind healing techniques that's delivered by a secure digital platform, and it's accessed by both licensed therapists and their patients, and supplement these consultations with digital courses and live wellness sessions.
And Tim, one thing is important. Their customers, it's enterprise. It's not consumer. It's enterprise, big contracts.
You're absolutely right. The business model is B2B, and the clientele is insurance companies that provide health insurance to individuals and corporations, along with large corporations. To give you an example, Tech2 Health, when they rolled out their new platform, within the first month, this was back in, I guess, June of this year. So it's a brand new platform that they came out with. And within the first month, they signed two major European-based insurance companies and one international manufacturer that has 180,000 employees globally. So between these first three contracts, immediately Tech2 Health has access to about 300,000 users through these three contracts. So there you go. You sign one contract, and it gives you access to 100,000 or more potential users.
So how much? Okay, and how much per user? How much revenue can you? Because from what I understand, the EU. So they're primarily based in the EU. So the EU has a a new mandate for reimbursing or for paying for mental health coverage? Give us the details on this, because it's big money.
Yeah, it is. And of course, you know, the real key for digital health tech to gain traction anywhere in the world is to sort out, you know, who the payer is. And slowly, it's come around in the last year or two that the insurers, let's say in the U.S., along with government payers in you know, places like Canada and Europe, have caught on to the fact that they as payers need to take a serious look at including digital health tech as part of the payment system. And it's only smart business. And so in Europe, this year, they mandated that for mental health, patients that require, you know, psychotherapy, the payer, whether it's the government or the insurance company or the employer, must reimburse to the extent reimburse us for our services at Tech to Health to the extent of $3,500 per patient per year. So when you start doing the math, the numbers get, you know, really big really quickly. So, you know, for example, I mentioned to you that already Tech to Health has signed 3 contracts giving them access to about 300,000 users. Now, there's not going to be
how many of those 300,000 users are customers for this $3,500
right. So they're all they're all potential customers. And now the question is what percentage of those users are going to require, you know, that level of intervention on mental health? And you can build, you know, different models. Looking historically, you would expect that there to easily be in excess of a 1% uptake of that user base. So when you start doing the math, you start saying, you know, 300,000 set of users.
12 million plus ballpark. 10, 12.
Well, so right. So of that, you're talking, you know, about in the neighborhood of about 3,000 individuals out of that set of users that can use, you know, a serious level of mental health intervention. And at $3,500 a head, you're already north of $10 million on those contracts that exist, and that's per year.
You know, but it could be. You know, it's interesting, Tim, because I think the number could actually be bigger, because, you know, one of the issues, you know, with the whole mental health thing is, you know, there's always a kind of a stigma. Nobody wants to go to a psychiatrist or whatever, but they'll do it on their phone, on their smartphone. So you might have a much higher take-up rate. Yeah, I mean, it might be 5 times higher.
It could very well be, and that's what we will be, you know, discovering in the very near future, exactly how much traction we get. But you're right. There's, you know, for a couple of reasons, we can expect that the uptake is going to be well in excess of the usual historical, you know, model, which is where, you know, you and I have to get in our car, drive to the therapist's office, sit there for an hour, and so on, as opposed to this model where it's all done in the privacy of our own home, the convenience of our own home. Somebody else is paying for it, the government or the insurers. And those are all reasons why we would expect greater uptake. But the other big reason is that this coronavirus pandemic has left the world in a debilitated mental state. In survey after survey that have come out recently, what we're seeing is that about half of employees that are surveyed are saying that their mental well-being is worse off today than what it was a year or 18 months ago, mainly because of the pandemic. So we've all suffered mentally because of that. And so when you throw that factor on top of these other factors, you're absolutely right. We should expect that the uptake is going to be, you know, well in excess of what the traditional traction would be for this sort of service. And again, we're only talking about right now, when I talked about, you know, a set of 300,000 potential users.
There's a lot of drivers. There's a lot of drivers.
Contracts that were signed, and we've got many more contracts that are in the works today. So we expect that number to the number of potential users to go up dramatically. Yeah.
Tim, I'm sorry, I interrupted you. I was gonna. There's a lot. So look, right now you're in the right space at the right time. So there's a lot of drivers, a lot of tailwinds pushing. You're at the intersection of telehealth, mental health, government, and these big trends. Really, the winds are blowing right in your favor. So you started talking about right now. So the contract. So right now you have this 300. So Tech2 Health has 300,000 patients in their contract right now. They're covered. That are in this universe.
So two of those are insurance companies. So those individuals would be insured parties, so members of that insurance plan. The third entity is a large corporation with global interests, and they've got about 180,000 employees. So part of it is employees, part of it is insured individuals. Yeah.
And this is okay. So by the way, I think for people to understand, it's very important. This is all these contracts are new, right? This is not like the company's been doing this for 100 years. This is they just started. This is so this is the beginning. This is the ground floor. This is not the end. Yeah. How big can this get?
By any means. These first three contracts that we're talking about that give us access to 300,000 potential users of our platform, and a potential revenue base of many millions of dollars. That's in the first month of operation, and there's many more discussions going on with other insurance companies and other corporations as well. So we're anticipating that the steep part of our growth curve is well in front of us still. So,
but the bottom
is brand new.
So Tim, the bottom line though for investors is that right now, with the existing contracts you have in place, you're in a position to generate roughly I think somebody showed the math here as 70 million based on 5%, which I think is reasonable because again it's a telehealth. So let's say it's 70 million, the existing contract, and these guys are just getting started. So my question is though, how big do you guys? I don't know if you can share internal numbers, but how big and how fast can you scale this? Can you get to 100 million run rate by the end of in the next 12 months?
Next 4 months might be aggressive.
12 months. Not 4. 12 months. We're going to give you a little leeway here.
So we clearly this is just the leading edge. We've got some aggressive expansion plans. None of these numbers today include any penetration into the U.S. That's a whole different ballpark, because Tech2 Health's strength is Europe and South America, but we on the AIML side have 70% of the U.S. and Canadian market in partnership with Tech2 Health, and we've got some really good dialogue going on already with some major players in the U.S. health market. Existing players in that market who really like the Tech2 Health model, and we're in a serious level of discussion with respect to potential partnerships with them. To put it into perspective, any 2 U.S. states equal about the entire European market for digital healthcare. So us penetrating the U.S. will blow the lid wide open on this, and
so the big upside. Wait, so Tim, so the big upside for you is the North American market, the U.S. really taking this to the U.S. market.
Yeah, so absolutely the low-hanging fruit is Europe and South America, and that's because Tech2 Health has a strong network in place in those markets already. This is a new platform for them, but it's not their first iteration in this area. With their old platform, over the course of the last couple of years, they had a historical track record and a proof of business model where they were able to sign contracts with about a half dozen of the major insurance companies like Malakoff, Humanis, Group Mutual, Mappa, Apicil, and several others. And so they had contracts with several of the biggest insurance companies in Europe, and they're now migrating those over to this new platform. So their strength and therefore our low-hanging fruit, meaning the easiest market for us to quickly penetrate, is Europe and South America. But our big goal is the North American market. Okay. And we're already making some.
So I want to kind of address some of these numbers. So in Europe, right? So we have a comment here that based on the numbers, which is you have so really your numbers are potentially 3 times this. So Yazan has put up a number. If you have 100,000, the patient population contracted is 5%. 3,500 is 17.5 million US. Your number is actually 3 times that, because your contract right now is, I think you said 300,000 you're covering right now. So potentially you could be doing 3 times this, which is 51 million. 51. So let's say, so it's really 51 million is the potential revenues that you could be doing. You're saying potentially 1% of the people historically use mental health, but we're kind of assuming that it could the uptake could be bigger because again, it's a telehealth thing, so it removes the stigma, which so the number is going to be bigger. Plus, you have all the thing with what's happening now with the coronavirus, all the stuff that's. So let's say, in theory, the existing contracts you have could be good for 51 million. They're just getting started. Tim, why are you being shy about saying 100 million? I mean, if they're just getting started, they might be doing 100 million in 12 months. Just this part of the business.
Clearly we have that sort of potential. There's no doubt about it. And again, what it'll all come down to in the end is what that traction looks like. But yeah, we can all put pen to paper right now. But if they
already have, this massive traction, this enterprise. I mean, to get these contracts with covering a 300,000 population. I mean, that's not easy to do. I mean, that's so if they can do that in just a short while.
For sure. No, beyond a doubt, you're absolutely right. The numbers can get really crazy really fast when you look at different uptake scenarios. And we've tried to when we introduce the contracts and the potential for it, we kept the number very conservative. We said 5 million, and that was based on not any inclusion of the new mandate, which is $3,500 per patient for.
So that's going to be, and that's the thing that's really exciting. This is the thing that's driving it. Essentially, the government is paying for it in Europe, right? So the government's paying at $3,500.
Exactly. Yeah, exactly. So what you get in Europe is the primarily governments are the payers when it comes to health insurance. Okay. But a lot of large unions rely on individual insurers and so on. So it is a blended system. But yes, governments make up a good percentage of it, along with some companies that self-insure and regular old school insurance companies as well. So it is a blended market.
Okay. So the deal is the transaction. So basically, the way this thing works is, you own. So how does the Tech2 Health? You basically own 25% of their European business.
So yeah,
or the company. The company you own the company, and
so we own 22% of Tech2 Health itself, and therefore the global revenue, and 70% on a joint venture basis of the North American market.
Okay. And essentially, is North America, is that where really you're going to see, that's where you're going to see the big upside here?
We certainly believe so. Beyond a doubt, the North American market for everything, whether it's healthcare or you name it, is the world's biggest single.
The Americans have a lot of mental problems. You know this. more than Europe. No, it's true. It's true. This is definitely, it's
clearly it's a large market, and there's some logical low-hanging fruit for us to go after first. Some of the more populous states, some of the states where you might say it's more trendy to be involved with a mental health specialist.
California,
right.
New York. Okay, we
New
know.
York,
Okay.
everybody,
Right.
those places, everybody's got their therapist. It's
not Wyoming. It's not going to be in Wyoming. You're not selling anything in Wyoming.
Exactly.
Okay. But the big population centers, the big cities is where that's going to be your main market, and they have good health coverage there. Everything else, so.
Exactly.
How much is this? How much are you going to sell this for in the U? How much is? Do you have any pricing? How big do you see this opportunity being in the U.S. market?
We any two average states in America equals the entire European market when it comes to digital healthcare. So it's a huge market. Today, depending on whose numbers that you believe, the digital health tech market is worth several $100 billion and growing by double digits. So it's a large and growing sector. And the one area of the digital healthcare in general that's been somewhat overlooked is the mental health side.
It's the perfect fit. Again, we talked about this many times, but mental health is the perfect fit for telehealth because, again, especially I think from what I understand, like we had another company that's involved in this. I think it was CloudMD, and the CEO said, "Hey, look, what they found is a lot of the demographic, younger people, like millennials, whatever. Yeah, they don't want to go to, or a lot of people, like even teenagers, right, who have who are." They don't want to go to a doctor. Or they'd rather do this on their phone, and it's much more. It's something they're used to, and so you can have a massive uptake.
Absolutely, it's far more comfortable in every way. It's far more convenient. You have your privacy. And this is something that we've all come to appreciate and understand over the course of the last 18 months. Whereas, if you go back before the pandemic and talk to people about, any sort of digital healthcare, they said, why? My doctor's clinic is right down the street, and all of a sudden the pandemic came along and people realized that that wasn't as accessible to them, especially, the chronic patients, the people, pregnant women or diabetics or weight loss management or cancer patients. They couldn't go to their clinic every week or every month like they were used to, and they had to rely on digital healthcare for the first time. And 18 months ago, it was very rudimentary. It might just have been a Zoom call like we're having. But it's gotten far more sophisticated in the last 18 months. And now people get it. And not only they get it, they say, we never want to go back. This is so much better. So it's better in every way. It's easier, it's faster, it's cheaper, it's more convenient. And everybody's saying that, not just the users, but the doctors, the clinic owners. They don't need nearly as much space. They don't need as many as
Tim, what's your rollout plan? What's your plan to roll out in North America? When is it going to happen? When can we start? What are the milestones coming up? Like, when can you get to X? What are we looking at here?
Okay, so several different milestones, both with tech to health and overall under the AIML umbrella. Now that tech to health is closed, AIML is now in the revenue stage with B2B clients, and so we're excited about that, turning that corner into revenue. Also, again, we've already discussed that that over and above the contracts that we've announced to this point, there's several more contracts that are in the discussion and negotiation stage, both with corporations and insurers. And so, stay tuned for several additional contracts, adding, many more potential users to our base.
Okay. In Europe or North America, which markets are we going to see news?
So the shortest term is in Europe, because
Okay.
Those have been rolled out already since June. So we've been in advanced stage discussion with numerous companies here in Europe. Yeah, within North America, we've kept our discussions at a higher level, waiting to reach this point of our development where we've closed on the transaction formally, and now we aggressively move forward again. We've had some good level of discussion with a company in the healthcare space in the U.S., a substantial company. They know Tech to Health and have been doing their due diligence on it for the last several months, and they like it because they agree that it's the right space at the right time.
It's the future. Look, it's the future. Yeah.
They have the infrastructure, the connections, the know-how, everything to implement Tech to Health very, very quickly into the U.S. market. And their vision is the same as ours with respect to rollout, which is pick a couple key markets, let's say Florida, California, New York as the initial rollouts, because they're populous, because they're
that's where people have the most mental problems, in those three states.
Sure, and that too, and so yes, so we're already at those stages of discussions with a potential partner, and now that we've closed on the transaction, we're going to look to to formalize relationships and look for a full-scale rollout this fall.
Okay, so yeah, it's interesting, because we're talking about the U.S., but really, the reality is the low-hanging fruit is just 3-4 of these states, and you're talking about California's 80 million, I think. I mean, it's a couple $100 million between those two states, and those are the prime,
Sure, and what's interesting too is that if you look at how the U.S. healthcare system works, what you'll find is that even though you have these large states, the healthcare system is dominated by a small handful of players, and so especially on the payer side. And so if you get in with the right group early in these key states, you have access to great chunks of these states' populations very, very quickly.
Tim, one thing I think I think it's important for people to watching this is with all this, right? Like right now you're in a position. I mean, so this business right now you're set to, in theory, the European side could generate 50 million. 22% of that is kind of your attributed, I guess, accounting wise, goes to you, right?
Right.
Yes. So that's let's call it 10 million plus revenues, health tech revenues, which is worth 10x. Those are the multiples, right? But right now, AIML is only trading at like a $20 million valuation. Yeah. I mean, in other words, you have essentially the stock is trading at a 20 million valuation. You got this, just that business alone could be worth 100 million. We haven't even included the U.S. business which is going to be rolled out in the next months, and we haven't even included HealthGauge and all the other. And we're going to talk about this. So let's talk about one thing I want to ask you is, what are the synergies? Like, how are you going to, in terms of HealthGauge in the U.S., are you rolling that out? What's going on with HealthGauge?
Yeah, so HealthGauge right now, there's a lot of different things going on different fronts. With respect to the U.S. market, there's some very good dialogue underway with potential B2B partners. So we're talking some large corporations, some health facilities like ACOs and different hospital groups. The one thing that we need to complete, and it's been underway for the last several months, and it's on the the home curve, is the completion of the Class 2 medical device FDA approval for the health gauge. We've been in that process since the spring, and of course, the major insurers and major hospitals and so on obviously want to see FDA clearance on the product before they can do any major uptake on it. But that hasn't stopped us from being at a good level of dialogue, advancing our potential strategic partnership.
In terms of, I'm sorry, in terms of the synergies, can you integrate the Tech2 Health and Health Gauge on the same kind of platform? Because it kind of connects on a smartphone, right? So can that be integrated?
So there's synergies in a number of ways between Health Gauge and Tech2 Health. One is that there's a direct correlation between one's mental health and one's physiology, and in fact, many companies like Apple is talking about, with their Apple Watch, coming out with an app that will help with early detection of anxiety and depression. How do they do that? By measuring certain physiological changes that are present in people who are also suffering from mental health issues. So clearly there's that physiological and psychological crossover, and so the use of the health gauge in tandem with the mental health therapies is a real possibility. But there's crossovers in other ways. For example, we mentioned how Tech2 Health, one of its first contracts is with this major industrial corporation with 180,000 employees globally. Once they signed that contract for mental health, this corporation came back and said, "That's great. We're very pleased that our employees are going to have access to your mental health services." They said, "But we have one other serious problem with a lot of our employees, and that's hypertension, high blood pressure. Do you have any sort of product that's good for that?" And of course, the answer was from Tech2 Health, from us, that no, Tech2 Health itself doesn't, but its sister company, Health Gauge, does. And in fact, that's right in the sweet spot of what Health Gauge is best designed to do. So we are now in discussion with this major corporation with 170,000 employees globally, to take care of their high blood pressure problems amongst their employees, along with their mental health. So there's that sort of synergy that's going on. Also, part of the plans going forward is for Health Gauge to penetrate into the European market. Well, Tech2 Health already has some very good connections in Europe that Health Gauge can piggyback on, and vice versa. Health Gauge has been building some very good connections in North America, and Tech2 Health will piggyback on those. So clearly, it's a situation where the companies can partner with each other, can leverage off of each other's technology and network and client base and so on. So yeah, there's tremendous synergies between the companies. And that's very important to us. When we look at acquisitions, obviously we're looking for companies that are crossing over from pure R&D into the revenue stage. We're looking for companies that have a niche advantage in what they're doing. So you're
essentially right now you're kind of building out the suite of telehealth services, a telehealth platform with these different services. What else do you have? Are you in discussion? Are you in any advanced discussions? Right? Can we see any more acquisitions announced? Any more deals coming up?
Clearly, So yes is the short answer. We've got a couple more companies that we've been in at a serious level of due diligence and dialogue with for many months, and it does tend to be a fairly long process. We do a deep dive due diligence before we enter into any sort of arrangement, and vice versa. We want them to understand and buy in to our concept, where they're becoming a member company under the AIML umbrella and sister companies to the other companies that we do business that we've done business with that are under our umbrella. And so it does tend to be a longer workflow to get to the point of where we're ready to sign a new acquisition. But we've got one in particular that we've been working on for some time. It's very exciting. It has great synergy with the other two that we've already announced. And I would suggest that it should be completed, imminently. It's at a very close stage to being completed. It's not done yet, so I'll caution everyone that.
So there's something coming up. So something to keep an eye on, and it should be imminently, you're saying?
Yeah, it's looking very close now.
Okay. Okay, Tim, we're out of time. I want to see if we could just address one thing, which is kind of this. We were talking about revenues earlier, but when are we going to see these numbers from Tech2Health showing up on your quarterly earnings? When can we see that reflected? When are we going to see that contribution showing up?
Sure. So now that the deal's been formally closed, as quickly as the next reporting period, by the end of this year, we will see the first numbers coming in from the Tech2Health side.
Okay, and from an accounting standpoint, I don't know, reporting, you're able to show like that 22%. You're able to show 22% of their revenue on your books.
Yeah. So we have to, and again, the accounting side, I'll leave that to the accounting experts. But when we have a majority subsidiary like HealthGauge is, we have to show consolidated financial statements, meaning absorbing their financials completely within our financials that we report. When we have a minority interest, as is the case with Tech2Health, the revenue will be reported, but it won't be on a consolidated basis, I believe, in the Canadian market anyway. But we will have to report those revenue numbers on our statements.
Okay, so things are there's exciting things in the pipeline, some milestones coming up. Okay, Tim, congratulations on wrapping this up. It took a couple months. These, obviously there's in the summer, the COVID, everything. There's a lot of, and you have, and there's more in the pipeline, more deals in the pipeline. That's the bottom line.
That is absolutely.
And organic growth, obviously.
Expect lots of really exciting news, coming up over the upcoming weeks and months. We're really excited by the future potential for sure, and we believe that that's going to start to manifest itself very, very quickly. Now we're going to see the results of all that effort.
Okay, Tim, again, fantastic. Thank you very much, and we're waiting for your next big announcement.
Thank you. I look forward to being back on your show, Jack.
Thank you again, Tim.
Okay,
Okay, great things happening at AIML, and so we're definitely looking forward to seeing that, especially some of the revenues in the mental health space. Let's get ready for ESE. Let me just set this up here. Okay, Conrad.
How's it going?
Okay? Fantastic. You can hear me okay?
Oh yeah.
All right, hang on a second. Let me get things set up here. We'll get let me get this. Okay, let me just stand by. Okay, let me just do a. Okay, let me just do a quick intro here. Let me get. Okay. Okay. Welcome everybody to Wall Street Reporter's next Super Stock, a live stream for September 24th. We are back with ESE Entertainment, ENTEF over the counter, ESE on the TSX. Conrad Vasella. Conrad, welcome back.
I'm back again. You must have missed me.
Well, yeah, especially now that you have some impressive numbers starting to come out. There's a lot of interest. And again, for anybody that's watching this video later on YouTube, you know, months later, our goal is to bring you those stocks which have that 10x to 100x upside potential. So these are companies which are going after three things. One, massive multi-billion-dollar market opportunities. They have multiple catalysts in place to ignite shareholder value, and they're at a key inflection point right now in their growth. So, Conrad, you know, we've had 7, 10 baggers, 18 months. Actually, ESE, it was a 14x from when we introduced it. I think you came on at 27 or 30 cents or so. The stock went to 4 and change very quickly. It might have gotten a little bit ahead of itself because it only took 4 months. You know, from 10x in 4 months, it's a little quick, right? But now the stock, you know, we've built a little 6 months later. I think it's come into its own. We've built a nice base. We're at $1 right now, $1.20, I think. So here is the important thing. So right now, it's very interesting. You just came out with some impressive quarterly. I mean, you delivered some tremendous quarterly results yesterday. We're going to get into the details, but from the top, you did for the quarter ending July 30th. This is 2 months ago. You did 4.23 million revenues. 4.23 million, which is almost a 500% increase from the last quarter.
Yes, sir.
All right, so we're going to go into the details of these numbers, but this is pretty impressive because essentially what this means is right now you're running at, so you did 4.2 million. You're running at about a 17, 18 million run rate. And does this include the new acquisition of Digital Motorsports? This doesn't include that, right?
Look at the smile on my face. Guys, shareholders, you know, you have to understand that this does not include Digital Motorsports at all. So we just closed Digital Motorsports. Historical revenues, their current run rate is about 4 to 6 million Canadian. We're very confident that we could probably accelerate that, but that's their current internal run rate. So, you know, you could do the math on that. In addition to that, we've had a tremendous last month and a half. We have about a month and a half left. We anticipate significant growth again for the quarter. And we're really scaling. We've hit our stride. We're scaling. Numbers speak for themselves. Obviously, you guys saw them. This is real. We're getting there brick by brick. I've been telling the whole team over the past couple months, we're going to get there. We're scaling globally and we're scaling fast.
So right now, if we include Digital Motorsports, which you just closed, you know, a couple of weeks ago, you're going to be at roughly 22, 23 million run rate approximately, if we include that. And that doesn't include, I guess it doesn't include any internal growth because those numbers are from July 3rd. That's old news. There's a lot of stuff that's been happening. Yeah. So, okay. So it's a 4. Okay. So let's just say I'll throw out 25 million just to make it round things up. You know, I'm a little bit optimistic, but whatever. So let's say you're at 25 million run rate today. So just for context, 2 important things, 2 key data points. You're trading at right now, the valuation of the company is, what is it, 80 million? I think you're only at, no, is it 80 million approximately?
Yeah.
You're trading at less than 4 times.
Around, yeah.
Yeah, so right, you're trading at essentially 4 times the run rate, which is really cheap compared, you know, for the space. I mean,
yeah, I encourage everyone to go look at all the esports companies that are listed. Go look at their quarterly financials. Go look at their market caps. They're all 150 all the way up to $1 billion. And in some cases, they have zero revenue, so absolutely zero. And some of them have a few 100,000. But we just did 4.23 million Canadian for the quarter, and that was last quarter. And we have more news and more growth coming from the business.
So okay, so right now let's say okay, so the run rate is 25 million right now, approximately. I'm throwing, you're trading at 3 to 4 times that, which is again, so that gives you intrinsically the stock could be trading at 2 times that, because the market's paying 10 times for high growth, high like esports space. Very also we should also add that in the esports space, there's more companies coming out now. In Canada, there's more. In the CSE, there's more guys. But how many of them actually have revenues, have real substantive, right? So, but it tells me 2 things. It's a positive because there's going to be more eyeballs coming on the esports space. They haven't been. Esports is still a relatively new sector. Market. It's like a theme. As a theme, it's really brand new. It's not like developed yet. So there's a lot more upside to go before people catch on.
Yeah, I think it's important also to highlight the fact that the industry, by and large, is growing at 25% year over year. Okay, so that's organic growth as an industry. So,
it's a deal. Somebody wants to do a deal with you, Conrad. Pick it up.
I mean, yeah. And guess what? It's 6:30, and I would have picked that up, but
that's right. You're in where are you? You're in Germany.
I'm in Europe.
Okay. So
I'm in Europe.
So the show last time we caught up with you on Friday, it was Friday morning, and I think not a lot of people came live because it was like 9:30, 10 o'clock.
Yeah, it was a little bit earlier. Yeah,
in the Eastern. How did the show work out, by the way? For the motorsports in Nürburgring.
Zero exaggeration. It was unbelievable. The energy and the buzz that we brought as a group. Our team internally is extremely motivated. They saw new opportunities. We brought new opportunities. We signed contracts. You'll be seeing news come out in the coming weeks. It was an international event, and it's exactly in line with our strategy. We want to start locking in multi-year contracts to create stability for revenue and future revenue growth. And that was the place to do it. I mean, we set up opportunities for not only this year, but for 2022, 2023, 2024. Our strategy internally is razor sharp. We want to go 3 to 5 year long-term contracts with stability and big numbers and increased margins. We've been working on that, and now they're coming in. And that's why you've seen those strong numbers, because the consistency is coming in now. We're hitting our stride, and the growth is there.
Okay, so what? So I want to get into. We're going to talk about again. One of the things that you said early on, again, when you came on our platform, I think you said that at that time you were only doing $1 million a run rate. It was really ground floor. The stock was at the ground floor, and you said, look, shortly thereafter, you said, look, my goal is to do 100 million run rate this year, hit 100 million through acquisitions, through like this kind of roll-up strategy in the esports space. You see a lot of opportunities, kind of a little bit very similar to what Enthusiast Gaming, EGLX, to what they're doing, but their focus is a little bit more on the kind of the media side, the kind of YouTube channel, stuff like that, communities. You're kind of focused more on the infrastructure, more other aspects of it, but very similar model, and that it's done well for them. I mean, that stock is recently trading at what $1 billion market cap recently, right? Similar, very similar things going on.
They went up to as high as $11, I believe, and they uplisted to the NASDAQ. They've done tremendously well, $1 billion+ market cap. They showed the market, quite frankly, how big it is, and that $1 billion+ is actually very real and realistic for us. You mentioned the $100 million pipeline. That pipeline is actually growing. I would like to say it's 100 million plus. We have some really, really interesting things in the pipeline, and I'm very confident to say that.
Now, one thing is when you first came on, you said, "Hey, the goal is to exit 2021 100. We have 100 million acquisitions in the pipeline." And here's the thing: we have a lot of people who say things. In the microcap space, with Penny, people say a lot of things, right? But you've been delivering. You've delivered on the acquisitions. We've seen already, what is it, 3 acquisitions? Now you started with, you went from $1 million run rate to 25 million run rate, essentially. Now you're at a 25 million run rate. You were at $1 million, $2 million. So essentially, you're up 10x in terms of that. You've done the acquisitions. Now, the question is, can you close? We're already in almost October. Are you going to get to 100 million? Are you going to close enough deals to get to the 100 million by December, end of December? Can you get there?
Let me ask the viewers this question. What do you think is easier, getting from 1 million to 25 million run rate, or from 25 million to 100 million? I'm almost there.
Point. That's a very good point.
There. So bet on me. We're going to get there. Is it going to happen December 31st? I can't promise that. Am I going to do another acquisition before the end of the year? I really hope so. I'm going to be on the lawyer's ass to get it done, because that's the path we're taking. I would love to do 1 more, possibly 2 more even this year. I mean, that's the way I'm wired. I can't control legal. I can't control the Toronto Stock Exchange. Their processes, how fast they work. But I have the pipeline. I'm ready to rock. So I'm very confident to say we're going to get there. It's just a matter of time. So be patient. I'll continue to deliver. I have been delivering from the beginning. So I've said it 1 million times.
It's a key point, right? It's listen, the thing is, bottom line is, originally you were supposed to, I think you were originally scheduled to come on next Thursday, but I said, look, Conrad, you got these tremendous numbers that came out. It's important to get you on, because look, it's very rare in the microcap world where somebody says they're going to do something and they actually deliver it, and it's on track. So in other words, I think the takeaway as of this moment is that, essentially this 100 million, we're assuming it's going to happen because so far you've done it. So if you get to 100 million, that's going to be $1 billion plus valuation potentially. Okay, let's just say it's 500 million. Let's say the market is only going to value at 5x revenues, right? So 500 million is still, $5 from, it's basically a $5 stock price from here, plus. Okay, let's, I want to dive into some questions. We've got some audience questions. We've got some questions, accounting questions, some, I think this stuff is a little bit boring, but let's address it. Let's talk about, okay. One thing we should talk about is so besides the increase in revenues, again, your revenues, 4.23 million for the quarter, increase of almost 500%. There was a loss. The loss basically narrowed. You dropped it, decreased by half. I mean, the loss narrowed from 3.8, I think, to 1.2. My number is correct? To 1. Yeah. So my question is, before we get to these, is when are you going to get to break even, and when are we going to turn the corner to profitability? Although the market, these are very small, so I don't think the market really cares about it, but people are going to ask, when are you going to turn that corner?
Yeah, I think it was an important part of building this company, specifically in the esports sector. People have been burning a tremendous amount of cash. If you look at other groups' balance sheets, they're very good at burning cash. We wanted to be the polar opposite. We really focused on 2022 as a target year to get close to that break-even, potentially even profitable opportunity. So that's the goal internally. We're constantly fighting for increased margins, profitability. We're hyper-focused on that. But you also have to remember, we're reinvesting into the business. We're in a hyper-growth phase. You saw the numbers. So like I said, a little bit of patience is needed here because we're going to really drive new opportunities and enter into new markets. So sometimes it takes a little bit longer to get that done.
Okay. Okay, so let's go into some audience questions. Okay, so he's asking, what are your margin goals?
So from day one, internally, we've set a goal of 30+%. I know that seems high, but as you know, with all these interviews, I like to set the bar high internally. So 30% plus has always been our goal. And now we're getting into a rhythm where we're really starting to see those numbers come through. And, you know, you look at groups like Digital Motorsports, the acquisition, they have tremendous margins, in some cases even higher than that, 40 to 50%. So we're really going to focus on that 30% plus number as a whole, overall across the board. But, you know, ideally, we want to continue to increase those margins. As I said, we're very optimistic and bullish with what we're doing, and we think we can accomplish that.
Okay. He's interested in understanding expected cash flow. I don't know. Is there a specific question, or you want to talk about cash? I mean, I'm not sure if I understand completely the question.
Yeah, I mean, I'm guessing he's asking, you know, how much capital do we still have in the till? It's public knowledge. We raised 8.6 million. Yeah, right there. So it's public knowledge. We raised 8.6 million. We put it out in the report that 9.17 million as a cash flow. So I think that answers the question pretty clearly.
Okay, so you have okay. So there's still plenty of cash on hand.
Correct.
To do deals and everything else. Okay.
Yes, because if you look at the acquisition of Digital Motorsports, it was heavily weighted on shares, which is another sign that Digital Motorsports believes in what I'm doing, and I believe in what they're doing, and they were comfortable with taking shares because they saw the opportunity. Niall had the opportunity to come on the show the other day, and he's absolutely fired up. I mean, if you can't feel his energy, you're following the wrong story, man, because we're
Niall, for anybody to Niall, he's the CEO of Digital Motorsports. He's
correct.
Okay. Let's get to a couple of questions. Okay, so follow-up question. Congrats on a good quarter. Has production begun on Bitcoin Vault contract? Is the revenue from that contract upfront? Is that upfront? And Conor, you want to talk about this is the esports show, right? This is the give us some of the details on that.
So this is the esports talent show that we rolled out in several different countries. So that it was Brazil, China, Vietnam, and Korea. We still have to launch the Brazilian market, and that's going to be coming up in the next 30 to 60 days. Ironically, we anticipate the Brazilian market to be the most receptive to this. We have a really great opportunity with some massive influencers in that region. So I think it's going to be a big success. And as it pertains to asking the question, is the cash up front? No, it's booked throughout the longevity of that contract and executing on entering into those different regions. Okay.
Okay, so Conor, let's talk about the acquisitions. You've picked up a couple different businesses. Let's talk about two things. One is, what are you doing in terms of to drive some synergies, to integrate these, to get synergy? Is there organic growth? It's important for people to understand that this is not just hey, just a bunch of roll-ups and whatever. We're just gonna throw stuff. What's the strategy here? How does everything fit in together? How does 1 + 1 = 7, or at least 4?
Phenomenal question. Take a wild guess why I'm in Europe. I'm working with these teams right now. We're implementing our CRM system. We have the pleasure of leveraging Niall's expertise, so the CEO of Digital Motorsports. He's a senior automation process engineer at Intel. He's a technology expert. He's helping us implement this CRM. We anticipate this streamlining not only his business, but the entire group's business to integrate and be completely streamlined across the board so that we could leverage our current assets, increase margins, and simply work in the most optimistic and optimal conditions.
Okay. Let's see. Okay, so we got a question here. with possible acquisitions, I think he's asking, are you going to raise more capital to close? In other words, if you're talking about potentially picking up 75 million, 75 million more in revenues, is there going to be more fun? I guess he's worried about, is it going to be dilution, which is the thing that everybody's worried about.
Yeah, as it pertains to financing, you guys saw the current cash balance. We do not need to finance at the moment. I don't believe our share price is in a position to finance again. We want to continue to use our share currency to go and execute on those acquisitions. And they're all accretive acquisitions. So we don't anticipate needing additional capital to service any of the current assets we have or the business that we have at the moment.
Let me ask you this. I guess, if you had to, because look, you're going to probably need to raise money if you want to pick up 75 million in revenue. So the question is, would you do it at any price below $3? I hope not. Say no. $4.
Yeah, I think you just answered the question.
Okay. Jeremy is asking, do you plan on integrating any recurring subscription-based revenue with digital motorsports simulators or any other parts of the business? I get, the recurring revenues. People love recurring revenues. What's the plan there?
Yeah, so if you watch the video where Nal was on, he's already started implementing that. We're also going to start implementing subscription models, recurring revenue models into our current business. We anticipate that to really kick in 2022, first quarter. So we're working diligently on that. And it's all part of the process, getting the CRM in place, getting the teams working and streamlined, and then implementing new software, new technologies, and then adding subscription models. That's really going to drive and scale our business. So you're seeing a lot of organic growth with that last quarter. You're seeing a lot of growth internally, but once we really turn it on with software and the technologies that we want to implement, I think you're going to be pretty surprised of how fast we could scale.
Okay. So with this, right now you're 25 million run rate. Organically, that business, let's say you did nothing else. Let's say you stop there. How fast, what kind of growth do you think you can see just with the existing business? Is it growing what? Is it 20%, 10%? What's kind of with what you have right now? What's the growth internally?
I want shareholders and viewers to understand, regardless of future acquisitions, my goal is still 100 million revenue. It doesn't change. It's just going to get us there faster. So the goal is still 100 million plus, $1 billion plus market cap. However, the new acquisitions, new targets are just going to get us there faster. So I'm very confident in the business. We're going to continue to grow and scale. We're entering new countries, new regions, landing new contracts. It's as simple as that. We're going to get to 100 million plus with the existing business. Everything else is just extra.
Conrad, let me ask you this. Okay, so we've talked about the 100 million, right? So as an objective right now, when you get to 100 million revenues, right? Is that it? I mean, basically, you're going to retire then? What happens then? What happens at 100 million?
Anyone who knows me, it's never it. We're going to keep going. I mean, for me, that's just a baseline. That's a baseline.
I mean, is that sort of like, because you didn't want to tell people, okay, I want to do $1 billion in business, because when you come out at $1 million valuation last December, people might think $1 billion is a little bit out there, but 100 million, it's not that crazy. Is that the idea?
If you ever catch me on the street and want to go for a beer, I could tell you what I really think. But the reality is, that's my baseline. I've been saying it like a broken record. Whoever's in this journey together with me, we're going to get there. I mean, if you can't see it, I'm proving it day in and day out. The news is constant. The numbers are coming out. It's all happening, guys. The vision is not a vision anymore. It's reality.
Conrad, I forgot that it's interesting. When you first came on the live stream, the first live stream, we always have a couple of companies back to back, with company and the CEO that was on earlier, the guy with the mining company, he actually said, "Oh, you know, when you came in, he said, oh, I know the, you know," he says, "Oh, I know Conrad from because he had a gym. He had a gym in Vancouver, and when you were." He said, "So yeah, he thought, oh yeah, this guy was a very hard-working guy. He'd been there every morning, like 6 a.m. Because when you were doing, I think this is when you were in high school, so before the football,
I was training. I was playing university football at the time, getting ready for my pro career. And I'll correct you on that. It was 4:30 or 5 a.m.
Right. So
it was twice a day, and I mean, I've been doing this my entire life. When I set a goal, it gets done.
Okay. Yes. Listen, it's not just talk. So far, guys delivered so far. What can I say? All right. Let's see if we can get to a couple more questions. Steve TV, are they going to be involved in F1 esports competitions?
So we'll have to wait and see on that one, but definitely one of our targets. Let's put it that way.
Okay, so Rick Brace, Vincent is asking, with Rick Brace. Oh, what about? Oh, he's asking, is Rick Brace coming on the live stream? Would he come on the live? He's a director right now.
Correct.
Okay.
Yeah.
What's his role exactly? Like, how involved is he as a director? And maybe for anybody that's new, maybe just give us a quick background on who Rick is.
Yeah, no, I highly encourage everyone to really go on Google Rick Brace. In my eyes, he's a legend in Canada. You know, he was the president of Rogers. He helped develop TSN, the ESPN of Canada, CTV. He's landed almost every international contract you could think of, MLB, NBA, Olympics, etc. I mean, he's a guy that has delivered over his career for over 40 plus years. And he was fortunate to build Rogers to, you know, a 30 billion market cap. I think that speaks for itself. As it pertains to his role, he's actually very active. He helps me with a lot of the operational stuff whenever I have a question, high level. He's always there to support. I think his role is going to increase now as we're scaling globally. And he's going to really open up his Rolodex. And we're going to be able to execute on some larger scale contracts in collaboration with him. But he's been unbelievable. Quite frankly, I've been surprised of how eager he is to get involved with the whole deal and just how supportive he's been. Okay.
Question about, okay, so the WPG, that's the company that's doing like, what did they do, 14 million revenue run rate. So Jeremy's asking, was there a finder's fee? He's got a question about the finder's fee paid on that acquisition.
Sure. So a finder's fee typically gets allocated to the individuals that help find the acquisition target. So it could be a M&A firm, legal, etc. So typically there's anywhere from 1 to 3, even up to 4 or 5 groups involved. So that fee is potentially split up between all those groups.
Okay. Jeff's asking, okay, any plans for uplisting in the US 12 to 18 months? 12, that's a long time out, but you know, what throw out?
I'm laser focused, guys. I got one goal, and you guys know what the goal is. To do an uplist on the US market would be a tremendous opportunity. We'll cross the bridge when we get there. But absolutely, if the opportunity is there and we could scale, I think that's, you know, where you could take it to the next level. There's obviously a lot of liquidity on the US exchange, on NASDAQ. So it's definitely something we're going to look at.
Yeah, I mean, I think once you get to like 100, once you get to that 100 million, then it would be time to look at the US. I mean, until then, you know, Canada has plenty of, you know, you don't need to be on NASDAQ until then, I think. So you got plenty of, you know, runaway here. Okay, so this guy, question, okay, great goal. Okay, so what could go wrong? What concerns do you have? What could go wrong? Because the goal is, again, a short-term goal, 100 million revenue. That's not the end goal. That's not just short-term. That's the short-term milestone. What could derail these plans? I mean, I don't know. You want to go through a laundry list? You know, asteroids, whatever. You know, wars. You know.
You know what?
viruses, you know.
I think the best way to put it, think about this. We just got through COVID, one of the biggest, call it viruses or pandemics in my lifetime. And we just posted a 500% increase last quarter. So clearly we're well adept for that type of situation. Our business is growing actually exponentially in a pandemic. To further that, how do we mitigate that? As I mentioned earlier in the discussion, we're pursuing 3 to 5 year long-term contracts. That creates stability. It de-risks us as a group, creates stability, creates real revenues quarter over quarter and year over year. So I think the proof's in the pudding. Once again, ESE delivered. ESE delivered during a pandemic. I listed the company during a pandemic, and we're on our way to our goals. So nothing's going to stop us. We're going to get there.
Okay. So Conrad, let's kind of wrap up on this. It's acquisition. Okay. So I think one of the big things that's going to drive the stock short term until the next earnings result is really good. Probably going to be people are interested in, you know, acquisitions, because really it's a growth by acquisition story so far, right? So what do you have in the pipeline coming up in the next, you know, I know maybe you can't talk about details, but like what kinds of companies, maybe what do you have coming up in the pipeline for the next, you know, 60 days, let's just say?
We're really focused on about 3 or 4 different groups right now. We're diving into due diligence. Both groups that are at the top of the list and the 2 that we're still working on due diligence are very scalable businesses. That was the number one most important thing for us. They're both accretive. It's for us, it's about their ability to scale via technology and just scale in general. So we isolated 2 out of the 4 as the most promising because of their ability to scale globally. So I can't get into detail, unfortunately, but we have 2 targets that are absolutely a dream scenario for ESE as bolt-ons and growth catalysts for the company. And then 2 more waiting to see what happens with due diligence on the first 2. So like I said, the pipeline is so robust. I'm so confident in the pipeline. It's 100+ million, and it just continues to add on. People are excited about what we're doing. More people are calling. They're coming to us now. It's been a role reversal where groups again, can I join forces and let's build something special together? You know, those type of conversations are happening now. So it's completely changed.
No, so it's very interesting. So I think really in terms of from like the stock standpoint, I think once you get to probably that next deal, you're probably 1 or 2 deals away from this, like just, you know, going really the stock blowing up. I mean, blowing up in the positive way. You know, in terms of, because at some point people, you know, because look, the company, the reality is, I don't know if people realize, essentially this stock is only like, it's not even a year old. I mean, you're only trading for barely a year. I mean, it really we just
had our 1-year anniversary. That's it.
Yeah. So it's like, and the thing didn't really get going up to like, you know, January really. So I think once people, so it's really not well known yet. It's really, even though you're coming on here like, you know, once a month, 2, it's not a lot of people know about the story yet. And I think even people who maybe it's in the background, but you know, they're kind of, you know, look, a lot of people, they need to look at something and they're not sure because they want to see, can the guy execute? Let's see what happens. But once they see a pattern, and because right now you've already established a pattern. Okay, the pattern is, okay, the guy said he's going to do something. He's done it. He's executed. He's delivered the acquisitions. He's delivered the earnings. So, but once they see a little more, like maybe another quarter or 1 or 2 more deals that are, you know, sizable, like 10 million plus revenues, let's say you get to 50 million run rate. At that point, you know, it's going to be that critical mass where people people are gonna say, wow, this is for real. This is gonna be, could be a $10 plus stock. I mean, it could be trading at 10 times revenues. They're gonna, how things go. The market always goes, it extrapolates way in advance, and then it catches up. So, in theory, the stock might pop to like, $15, for, who knows what could happen. But I think that's going to be the key thing. People are going to be waiting for those, one or two more deals. It's like you're probably one or two more deals away from that, big blowout event.
I couldn't agree more. It's creating trust with our shareholders. I'm doing my job. I'm creating consistent pattern. We've executed on 3 acquisitions already. We've only been listed for a year. We have several more in the pipeline, and we're going to continue to execute. I'm going to continue to deliver quarter after quarter. And that pattern is just going to get stronger and stronger. And then, we say it all the time. This is a ground floor opportunity. This is a generational opportunity. If we continue to grow at this pace, I think viewers are smart enough to know that this is the opportunity. It's crystal clear. We have the capabilities to get this stock to $4+ It's already been there, but we have even more substance now. We've delivered even more to date. I think we're on our way back to those type of numbers.
Fantastic. Let me see. Do I have? Okay, we got a this Jeremy, overweight. Overweight ESE. Now he's underweight. Okay, biggest holding might get even. Okay,
I could answer that. Guess who bought the stock today? I'll join you in the overweight category. I bought today.
Oh wow. Okay, you bought shares today.
I bought shares today.
Okay, on the breakout, the momentum, Conrad, you're a momentum buyer. All right, which is good news. All right, so on that note, I want to thank you, Conrad. Thank you, everybody, for joining our live stream, and we will see you all hopefully with a big news announcement. Hopefully, we're going to have a big news announcement next time you're on.
Like I said, I'm going to continue to deliver, and things are coming, guys. Be patient, watch the news, follow the story carefully, and don't wait. We're building something really special here. You could take it from me. I'm buying on market. I think you guys know where we're going here.
Fantastic. On that note, Conrad, thank you. And thank you, everybody, for joining. See you on the next one.